Good morning, everybody. I'm Ed Parcaut, and usually have Mike Kelly here with me on Real Estate Jerky Daily, but he decided to go take some time off. I guess he's working too hard. I think we all have been working a lot more than we normally have, or it's just as much, and we should take that time off when we need it. All right. So, what does that mean? Just the facts. Just give me the facts, Ed. All right. So, weekly housing inventory is up again this week. Yeah, they're saying with mortgage rates hovering, being above 7.25, you're going to see weekly inventory data grow between 11,000 to 17,000 per week nationwide, and we're kind of seeing that. We never kind of hit that target, but now we've seen it for 2 weeks in a row. The inventory has grown by 13,247 in this last week nationwide. So it went from 543,044 to 556,291. Same week last year at this time, we were at 421,924. So we are seeing a little bit more listings for this time of the year, which is good because we haven't seen this since, gosh, it's been a long time. What was it? We haven't seen this since 2022, I think it was. Let's All right. So in 2015, we had 1,071,283. In 2024 is going to have more sellers who are also going to be buyers versus last year. Last year's had the lowest level of new listings ever in 2023. Can you believe that? I can't. When we only have death, divorces, and job transfers, but actually the job transfers are actually, were cut back because of the fact that it's so expensive for people to get out of the rate they have now and to go buy another house somewhere else. That a lot of people aren't doing that. And also the other stuff, like if you look at Florida right now, they're having some issues with homes and stuff where their prices in certain areas are getting hit. They just have more on the market than people are able to pick up right now. And so they're seeing a difference in their pricing going down a little bit. So this week is jobs week, huge week for jobs. Luckily, Mike will be back for his favorite one, which is the BLS job report on Friday. We have Case-Shiller tomorrow. We have FHFA. Those are going to all talk about what the home prices are. One is new, one is existing home sales, and it has to do with just the primary residence, single family homes. Wednesday, we have mortgage applications, ADP employment, and then the Fed statement. The Fed statement this week is going to be much greater than normal because they're going to actually probably say that they're going to start buying more mortgage-backed securities, and we want to see that. That'll help with the rates going forward. One thing I did want to talk about today, Mike and I talked about this on the radio this last weekend, but there was an article in the Sacramento Bee that last week that talked about the 10 most overpriced housing markets in California. And look at that, Modesto, we're number one for something finally. So what this is saying is the average price is what people are paying. The expected value is what people think they should pay. And that's the only difference. So I would say that this isn't that we're overpriced. I just think that people don't really understand what's going on in our market. And it's up to us to actually explain it to them a little bit more. So people are expecting to pay $351,000 for that home, and they're paying $464,777 for that home. I just unrealistic expectations, or I should say, just not understanding where our market is what's going on right now. That's how I look at it. So we talked about this over on the weekend on Saturday, and slowly went through each one of these. But if you look at that, Modesto is number one. Better to be number one for this than number one for, I guess, for auto thefts and other stuff that we've been known for. So with these numbers, this is something you should talk to your buyers about, your sellers, what people are expecting to pay versus what the actual what the price is. I just thought that would be unique for you guys to have. If you want to know anything about this, I can send you the actual article. Like I said, it was in the Sacramento Bee, came out on April 22nd. All right. So, it's not that we're the most expensive. It's just the fact of what people are thinking they're going to pay for the homes in our area. And so that means, according to them, we're paying a 32% premium for our homes. I just thought that would be something you should know to talk about with what you're coming across. And again, we have a bunch of news coming out in the next couple of days, but that's pretty all there was today. Was not really a bunch, except for the inventory is increasing. That's what we talked about in the beginning, that the current nationwide inventory went up by 13,247. So we are a little bit more than we were last year, definitely a lot more than we were last year. But we're starting to see some additional inventory, but not too much. We don't see a bubble. Now, like I said, there were some places in Florida that are kind of having some issues because the prices are just so expensive and there's not jobs there. It's just like San Francisco. You can get a really good deal right now in San Francisco if you want to go buy a home over there. It's a long-term play because you're going to be better in a few years. Anyway, that's all I have for today. Like I said, it's going to be short and sweet because all the numbers are Tuesday, Wednesday, Thursday, Friday. And so those will be a little bit longer. Mike should be back on Thursday. So it'll just be me in the next couple of days. If you have any questions or want me to go over anything else a little bit more, just give me a holler here. You can message me or you can reach out to me at ed@parcaut.com. And I want you to make it a great day. And thanks for being here. And we'll talk to you tomorrow. Short and sweet.